Good evening, everyone. This is Financial Literacy 101. And this age have made a lot of people do a lot of things with their homes. They're trying to get a lot of money out of their homes, and you're trying to make a lot of business decisions dealing with your home. And one of the biggest decisions other than selling your home is refining your home, having a refinance on your home. And some of the questions you need to ask yourself or do the research on is, first and foremost, do you know your home's equity? Do you know your home's equity? Because we need to understand that this year in the first quarter, some studies came out basically saying that 6.5%, or rather in layman's term, $590 billion in house revenue actually increased people's equity. It actually increased people's equity. So if you're looking to refi your home, that's actually great information. But there have been some homeowners, at least 20% of them, have found a decrease in their equity. Maybe people are moving out your neighborhood. Maybe the neighborhood environment has changed, but there's various reasons why the equity in your home decreases. Okay. Secondly, knowing your credit score. Do you know your credit score? Because we understand that your credit score has a large portion to do with the interest rate that you'll get. And if your credit score is primarily low, you may not even be approved for a loan to refinance your home. Even though you're not late on your home payments, even though you've had that home for at least a year, you can still be denied based upon your credit score. So it's imperative, it's important for you to maintain a good credit score. Thirdly, do you know your debt to income ratio? Because even though that you're trying to refi your home to possibly make your payments lower or to refi a 30-year fix into a 15-year fix, it still has a lot to encompass in your debt to income ratio. So these are things that we're going over so you can factor in order to see if you may qualify before you, quote unquote, have them to qualify you for the loan. Good evening, Nolan Baptiste. Nice to see you today. Thank you, good sir. Then the other question is, and I'm going to go over my notes with this one. This is very particular and important because what is the cost of refinancing? What is the cost of refinancing? A lot of you may not be aware of that. Okay? Because it may cost you a certain amount of money to actually refinance. Let me bring this down just a little. There we go. See, refinancing a home usually costs you between 3 and 6% of the total loan amount. You need to factor these things in because it's going to cost you money. It's going to cost you money to actually refi for you to get that lower payment. Think about that. And we're not even getting on private mortgage insurance, okay? If you're still paying private mortgage insurance, it's not going to mean anything because you'll be paying it going into your new loan. A lot of people tend to think that when you refinance on a home, that you're not going into a new loan, but it's an entirely new loan and most likely with a new company. So hopefully you understand that. What about your rate versus term? What about your rate versus term? If you want to pay less interest over the length of your loan, look for the lowest interest rate and a shorter term. But if you want to pay off your loan as fast as possible, you should look for a mortgage with the shortest term that requires payments that they can afford. Because some of you just refinance to lower your payments. But if you're going to refi, understand first and foremost, you're going into a new loan with a new term with hopefully a lower interest rate. And then what I always tell people, continue to pay the same amount until a year and a half after, so you're not soaking up that extra time. You can actually make up time. Because take, for instance, right, you do a 30-year fixed loan. You pay off 2 years, so now you're at 28 years. But when you refinance, you usually go back into a 30-year loan. So now you have tacked on 2 years to that 28 years because you're in a new loan. So in order to catch up, so to speak, If your payments for your home was $1,500, then continue to pay $1,500 a year to 2 years, and that would usually catch most people up. Because usually, like a large sum would be taken off. Let's say, for instance, you were paying $1,500, and then your payments were decreased down to $1,200. It's probably a good idea for you to continue to pay $1,500 for the next year. And then as you get closer to that 28, where you see you start knocking down the principal, then that would be good for you to now pocket and save some of that money. What is your break-even point? A lot of people don't go over this, so I'm gonna go over my notes very, very carefully here. Okay, let's talk about this. So your monthly savings are completely yours once you refi. Okay, you can do whatever you want. You don't have to take my advice. But for example, if your refinance costs you $2,000, it costs you $2,000 to refi your home, and you are saving $100 per month over your previous loan. Think about that. It costs you $2,000 to refi, and once you do that, you're only saving $100 off that refi of your previous loan. It will take you 20 months to recoup your loss. Now, if you intend to move or sell your home within 2 years, a refinance under this scenario may not make sense because, again, that's digging into your equity, was digging into your home value, was digging into your overall profit. So before you guys go ahead and refi, this is probably something you guys should really think about. What about your private mortgage insurance? So most conventional lenders, if you haven't paid off more than 20% of your home, you have to pay an additional amount that's usually included in your loan, which is private mortgage insurance. Homeowners who have less than 20% in their home when they refinance or finance period alone, you pay primary mortgage insurance. See, reduced payments due to a refi may not be low enough to offset the additional cost of PMI. It may not be enough. A lender can quickly calculate whether you need to pay PMI and how much it will take and how much it will cost you dealing with your house payments. And this is very important. And I can spend all day talking about this, but I just can't and I won't because it's just too extensive. And not saying that people won't understand, but this is the one thing that you really need to understand. Know your taxes. See, taxes is like a silent or invisible killer that only visit us once a year. Because some of you'll be making moves, trying to make business moves, investment moves, all of the above. Then comes tax time. Now, some of you in the lower bracket of society, you get a lot of money back. But those in the middle class and high class of society, people who are starting and who have started businesses, those who have not reported all of their earnings and think that they got over. It happens to us all. When you're starting your own business or have your own business, there's a lot of things that you need to report to the IRS. But there's other documentation, there's other reports, there's other filings that go out with your business that if you don't report those taxes, they come at the end of the year and now you owe taxes. So it's very important that you get a CPA or someone who is very knowledgeable in taxes, even when you're refining your home. Because this is what I know that a lot of people do. You always want a smaller payment. But why do you want a smaller payment in your home? Because when you first financed your home, they gave you the monthly amount. They gave you how much the loan was going to cost you. And associated with that amount of money, you have your mortgage insurance. If you haven't paid more than 20% down, you have your private mortgage insurance. You have a home warranty. Then you have all your utilities and all those things that include payments for your home. So you say, okay, well, these bills increased in price because of inflation. So we probably need to refi. A lot of people do home remodeling refinance, meaning they want to take the equity out their home and upgrade their bathrooms, upgrade their kitchen, upgrade a bonus room or an attachment or extend their home out. That's going over time to increase the property value of your home. I can understand that. But you're like, oh no, I'm paying $1,500. I would like to pay $1,450. Is that really worth taking out the value and equity of your home? I don't think so. I don't think so. That's probably a dumbass decision. Matter of fact, I'm just going to call it an unintelligent decision. I had what people may call a Ross moment. So don't do that. Don't do that, okay? Do not just refi to lower the price of your payments every month. Have a cause. Have a reason. Have something that's going to bring more value to your home. More value to your home. This is what you need to do in order to increase the value of your home, because some people just refining, taking money out their home and pocketing the money. And then what are you going to go do? Spend all the cash. Spend all the cash. So I want you guys enjoying your holiday. I want you guys to enjoy your Labor Day. But let's not go out and make rash decisions. And last but not least, do me a favor. Do me a favor. First of all, give me a thumbs up. Give me a thumbs up. Thank you. Thank you very much. Thank you very much. But don't refi your home and then take that money out of your home, take the equity out of your home and go buy a car. Don't do that. We need to understand cars are a liability. Cars is not going to bring you real value into your life like a home will. Once you have a home, once you have land, there's multiple things you can do to bring more income inside of your home. So ladies and gentlemen, if you like this video, give it a thumbs up. If you're not a subscriber of Ross World, I encourage you to subscribe. And meet me every morning, Monday through Friday, except on holidays, but Monday through Friday for a stock review, so you can learn more and invest more. This is Financial Literacy 101. Learn money and be inspired. Give me a thumbs up because I'm giving you a thumbs up. That was corny, right? Anyway, guys, have a great day. I'm out.